So it's been a fantastic start to the stock market in 2023, and because a lot of stocks, especially since that October 2022 time, we really hit kind of lows in that period of time. And if anyone bought any stocks in that period of time, or you were averaging in through that period of time, quite a few people now, because we've had such a rebound since then and a really good start to 2023, quite a few people are starting to see their stocks actually start to shoot up, or if they have caught somewhere around them bottoms, they're quite far up on a lot of the positions, especially in the UK. If you bought in the UK when we had Liz Trustin, you're doing quite well from that time period. So I'm starting to see now a few comments, some in the Discord and some on the YouTube, talk about stocks like HIMS, for example. HIMS is a stock that's absolutely flying. Is it time now to sell some of these stocks, or is it time to potentially sell some stocks before there's another crash? Is there a crash that's coming and we need to sell out the stock? So I thought it'd be really good to talk about, now that we've transitioned a bit more into an optimistic market, what is the best thing to do right now, in my opinion. So I hope you enjoy this video. So like we're saying, great start to 2023. Who would have predicted the start that we've had? I think my portfolio is up over 16-17% so far this year, which is just absolutely insane. And this is the key thing. No one knows what's next. This is the thing. We're talking about this right now, and no one knows within 1 month if the stock market's going to be up, if it's going to be down. We only have to go to the last day of 2022. Everyone was talking about that, the start of the new year, and like, oh, it's just going to be another horrible year. The stocks are just going to continue downward. Nobody was going into 2023 going and say like, oh, the first few weeks will be actually really good. Nobody was saying that. Nobody was saying the start of 2023 was going to be good. There was a few people whispering that the back end of the year could be okay, but no one predicted this start that we've had, which has been absolutely amazing. And that's a prime example. I can tell you, not a single person out there was thinking we were going to have this rebound that we've had. So that's the first thing to say. You can't predict the market. No one predicted that we were going to have this great start to the year. So don't listen to anyone that's saying, oh, it's going to go down from here, it's going to go up from here, because no one can predict it. The way that I look at it, first of all, is if this is the bottom right now, and you look at the rebound that we've had, if you look at the S&P since October time, like that bounced 10%, I think we're up like 4% for the year. We're only up a limited amount so far. Same on the UK stocks. So you've got a bit of a taste here for what a bull market can do, what a bull market can do for some of your stocks. This is only a little bounce. If you look at the bounce that we've had, we've been downtrading and we've had, a little bit of a bounce here. And if you look at the last major drops that we had, one of them being 2018, we had, 20% crash in 2018, and 2020, obviously, we had the CV situation. After them crashes in the stock markets, the S&P returned over 100%, and the S&P in 2020 returned 105% in that time frame. So this is only a 10% jump in the S&P. And you think about if that's the jump in an index, a very safe index. You've seen what's happened in that time frame, where the S&P has gone up 10%. A lot of individual stocks are up, 20, 30, 40, 50, 60, 100%. Some stocks have really significantly bounced in that time. So if you think, okay, if we, let's just say the next crash that we've been through, 2023, or whenever we have the bull run, what's the next bull run going to be? Is it going to be, say, another 100% run in the S&P 500? Well, if you imagine this is only a 10% bounce and the S&P goes on to do a 100% run from here all the way to, let's say 2026. Imagine the returns you're going to get in that time frame when we do hit a bull run. Bull runs last so much longer than bear markets. The average bear market's something like a year and a half or something. The average bull run's something like 4 or 5 years, and the returns are so much more. So you imagine this is a little bounce. Imagine if this is the bottom. If this is the bottom and we do bounce from here, imagine the run that we're going to go on. Imagine the returns that you've had in this time frame, and then imagine what that would be if we have the S&P and the markets run over 100%, and how many individual stocks that's going to be dragging up. You're going to be absolutely laughing. So that's a little bit of it's been a little bit of a nice taste as well. And the thing as well is why no one's saying this quite loud at the moment is because we've been so beaten down through the last 12, 24 months that every time we've had a bit of a rally, it's being killed off. And now they're having a little bit of a bounce. Everyone's gone to the view of, it's not the bottom of the market, it's just going to go lower, because everyone's just beating down, everyone's negative on the market, everyone's kind of got fed up and gone, it just keeps going down. That's the feeling in the market at the moment. But at some point we will hit the bottom and we will go on a rally. So just take this as an example here. If this was the bottom, you've had a taste of what the bottom could be and what stocks can return, which is the key thing. But hey, we don't know if it's the bottom. It might be we might continue going lower, but that's something to consider. The ultimate thing of if it's time to sell off your stocks comes down as you as an investor. Are you a long-term investor? If you want to be a day trader, if you want to be a swing trader, I can't really help you because I'm a long-term investor. Maybe you do want to go sell all your stocks. Maybe you want to go take all your profit off the table. Maybe you think the market's going to go low. Maybe you think it's going to go higher. If you're a swing trader, if you're a day trader, I don't know if you should sell all your stocks because I'm not one of them. My view is as a long-term investor. My view as a long-term investor is if this is the bottom and you've had a taste of a little rally, if we do go into a bull cycle, why would you want to sell now? This is only the beginning. You've had a little bit of a taste of what a bull market will be. You've gone through all that pain, so why would you want to now release it and miss out on so much potential upside? So that would be my view as a long-term investor. And then if it does go lower, at the end of the day, you're only going to have longer and more opportunity to accumulate shares that you like. And then when we do hit the bull market, you get more upside. The second thing is, do you have price targets? Now in this time frame, and we've been going lower and then we've had this little bounce, in that time frame, potentially you could have had a stock that has got very close to your price target. You might have bought that stock and it has maybe gone up 30, 40, 50, maybe 100%, and you're thinking, okay, that's actually my price target. And that's the key thing that you want to set price targets for. You've got to, when you invest in the stock, and if you're a long-term investor, you want to be working out, okay, in 5 years' time, what is my stock, my business that I'm investing in? What would I be happy to sell that stock for? And you want to get that price target. And once you get that price target, you're not phased by stocks going down, stocks going up crazy, because you've got your price target. You think that's what I'm happy to sell at and I'm going to wait there. And then when you do get to that price, you're not oohing and ahhing or hesitant about what to do. Because trust me, there'll be times where you do get to that share price and you're like, and then you look back and go, well, I did say it was a good price target. You can double check the numbers. Maybe things are a bit better and you go, actually, I think it could be worth a bit more now because they're actually a little bit ahead on revenue or profit. So you can always reassess it. But that's why it's really key to see as well, have any of them hit the price targets that you wanted them to do in the longer term. The next thing is, do you want to protect some profit? There's actually nothing wrong with protecting some profit. So I just said all that about long-term investor, price targets. That's key for probably selling a stock. But there's nothing wrong with protecting a bit of profit. An example for this is Card Factory. We talked about Card Factory on the channel a while ago, a few days ago, and I can't remember what my average is now. I think maybe I'll say it's like 45p, and I think the stock went near enough to let's say to 100p or £1. So I was up nearly 100% on that stock. Now for me personally, I think that stock could be worth around about 130p plus. So it's still not my price target that I wanted it to do. So I was like, well, I don't want to sell my position. I still want to hold it for the longer term to get the bigger returns in. But I did look at this jump from 45p to £1 or 100p, and that jump happened within, I think it was either a 4-month or a 5-month time frame. Now, because that happened in a 4 or 5 month time frame, I naturally looked at that jump and went, that is a big jump for a 4 or 5 month time frame. So even though it's not got to my target and I don't want to sell, you've also got to look at the point of view and gone, have we gone a bit far? Have we got overstretched? And that was a stock that I own. I was like, we're a little bit overstretched here. That's a bit of a crazy jump. To return that much, to return 100% in 1 year is a lot. I thought it would be doing that over a few year time period, not over a couple of months time period. So also, even as a long-term investor, I do think there's times where if you're up and you make very quick money or fast money, we're all in this game to make money. We're all investing in the stock market to make money. So if you have a stock that's up, I never think there's anything wrong with just taking a little bit of profit off the table if you think that's gone a little bit too crazy. So there's also that consideration to take in here, and I never think there's anything too wrong with that. So overall, that's the combination of factors that I take into if it's, we've been on a good run, is it time to sell your stocks now? These are all the combinations that I would take in, and remembering how much more potential there would be holding through a complete bull cycle. Are you a long-term investor, or are you a day trader or a swing trader? Do you have price targets? Have they met them long-term price targets? But also consider, okay, but has it gone a little bit too crazy where it's just worth taking maybe a little bit of profit off the table just to protect yourself? There's never anything wrong with that. And that's what I personally am looking at. And for me, I'm mostly holding all my investments. I'm happy to hold them still. Is it probably time to take a little bit of profit off the table? I personally have took one stock a little bit of profit off the table just to protect myself, but apart from that, that's where I'm at the moment, and most of my stocks I'm still very happy to hold, and hopefully when we do have the bull run, get even more returns than what I've had in the last couple of months, even though the market's been really nice. You put that into the context of that would happen in a longer time period in a bull market, it's quite exciting. So yeah, that's what I just thought I'd talk about, because a few people have been mentioning about maybe selling certain stocks because they've only had them for a few months and they're up 30, 40, 50, 60%. So hope you enjoyed it. Smash that like button if you're around here, subscribe, catch you in a bit.